stay there. It's going to stay pressuring higher inflation. But as you say, those costs are going to be shared more and be spread more.
Yeah, and we just got another line just a few minutes ago, so, well, half an hour ago, worth mentioning as it ties in. Qatar saying that they will demand that Europe signs a 20-year gas deal if they want the fuel. So, you know, if you're going to want that insurance away from Russian gas, then it's going to come at a price. Thanks to Mark for spending the past hour with us. The Open is up next. Futures have been pointing lower and continue to do so. European futures, that is. US futures point slightly lower. This is Bloomberg.
บทนอนยาวแต่ชิวๆด้วยประกันสุขภาพเหมาจ่าย Signature Care จาก Cigna.
We see you
for who you are and who you can be.
We want you to unlock your potential
and change the course of your future.
We can help you grow, whichever way you decide.
So let us welcome you to your new home.
Because we see opportunity.
We see potential.
We see you.
The University of Central Lancashire.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
We are accelerating into a digitized and decentralized future.
That is why Bitcoin is here.
The cryptocurrency market has roughly a $3 trillion market cap. That's a huge milestone.
This is the largest, fastest wealth creation event in the history of the world. And financial institutions have only now just figured this out.
It is a power to the people kind of technology.
However, we are still tied to the centralized banking system in a way that is unnecessary.
The crypto sector today is largely unregulated.
This is a little bit like the American Wild West.
Essentially what DeFi is, it's like a big casino.
That's scary to the JP Morgans because they're seeing all this growth and they're left out.
You all can do whatever you want and I don't care.
We're seeing a revolution unfold right now. These are historic times.
Buckle your seatbelt. This is where the ride gets really interesting.
Welcome to the European Market Open. A minute to go until the start of cash equity trading. I'm Tom Mackenzie in London, and here are your top stories. Jay Powell tells Congress a recession is possible, as steep interest rate hikes will make a soft landing very challenging. He appears before lawmakers again today. Stocks and futures lose ground as growth fears occupy the forefront of investors' minds. Oil continues to slide. And Elon Musk says Tesla's new plants in Berlin and Austin, Texas are giant money furnaces, losing billions of dollars just days after clarifying to Bloomberg that he plans to cut 3.5% of Tesla's global workforce. OK, let's check in on these markets then. The futures pointing to losses of around 0.6%. Jay Powell saying that, yes, that path for a soft landing is very narrow indeed, and there is indeed the risk of a recession as the Fed pivots to try to tackle inflation. The FTSE 100 is currently just down 0.1%. We continue, of course, to keep an eye on what's happening within the energy space and basic resources. Xi Jinping of China, the president president, of course, coming out and saying that they are still trying to hit those growth targets of about 5.5% for the year of 2022. Of course, most economists think that is going to be very challenging, if not impossible. Economists have downgraded, in fact, their forecast for growth out of China to 4.1%. The FTSE 100 now down 0.5%. The Spanish IBEX down 45 points. Over in Germany, you're seeing losses of 0.4%. You saw a big squeeze and a big move lower in the auto sector yesterday as well. Just keeping an eye out that in Germany. The CAC 40 over in France lower by 36 points. Let's switch it over and see how things are playing out then. Again, there was initially some modest optimism when Jay Powell started to speak, and then that turned lower again on the recession fears. The futures now stateside pointing to losses of 0.2%. We know that Treasuries has bid as well as part of this kind of modest risk-off mood that we're seeing in the session. Euro-dollar, keeping an eye on this. We've got PMI data out of a number of Eurozone countries throughout the next 2 hours, which will kind of flesh out the economic trajectory for the Eurozone. The implications, of course, for the single currency. 105 as Madame Lagarde commits to hikes in July and September, currently gaining 0.1%. Brent remains in focus, $110 a barrel, down 1.4%. We've seen volatility in the oil space. Are we starting to see signs of demand destruction? Iron ore, 113, higher by 5%, linking that to what we heard from Xi Jinping, recommitting to those growth targets. Is it really sustainable, though? OK, let's check in on some of the individual corporates that have taken our attention today. The Italian banking space and Banca Monte Paschi just up a little over 0.1%, planning to cut 4,000 jobs. And there's a recapitalisation as well at play as they lay out their 2026 plan. Nordex winning a deal in Poland, currently unchanged. We'll check in back on this stock in the next few minutes later on in the show. Winning an order in Poland for 11 turbines, it seems. And Total, just bringing to your attention what's happening in the oil space again, continues to be relatively under pressure this week. We continue to watch, of course, what happens around Brent and WTI, currently down 0.8%, just one of the one of the oil majors we are focusing. Let's get out to Mark Cudmore, Bloomberg's MLive managing editor, for a look, a deeper dive into what's happening within the commodity space on these growth fears. And again, Jay Powell saying that, admitting that there is now a risk of recession. What does that mean for the commodity space, Mark?
Yeah, good morning, Tom. I think everyone's very focused on WTI this week and generally the oil prices, and that makes sense. But I wanted to draw attention to copper, which really is the most important industrial metal. We have had zinc, aluminum and tin have their moments in the sun some points earlier on this year. But overall, it's all about copper for a best judge of the economy. We used to call it Dr. Copper. That might have been a slight exaggeration of how powerful was an indicator, but it does still matter. Now, it is down at a 15-month low. It's 20% off the highs, and this is because the world is getting really excited by the idea that there are going to be recessions in several major economies, perhaps a global recession. And an extra angle is particularly in China. China is the biggest consumer of copper, so the fact that we're getting more negative in Chinese growth, and this clashes with the story overnight that President Xi Jinping reiterated the determination to hit their growth targets in China and that they'll provide more policy support. We've heard that positive rhetoric before, and traders just don't believe that, and copper shows that. One extra tangent to the story. It's not just about recessions. It's also about a little bit of waning enthusiasm for the ESG green theme of the last few years. So part of buying copper is the electrification of the world. We move away from fossil fuels. But as we've got an energy crisis, suddenly we're seeing a new enthusiasm for coal plants, sadly perhaps for the climate and the environment. And that means that many people are going, hey, maybe this idea that the whole world's going to be electric and we're going to need endless copper forevermore, maybe it's an extra few years down the line and we need to change our demand calculations. The important thing to draw attention to here, though, is this is not a supply story. This is about a demand story. And at the moment, we're very, very negative on that demand picture, and I think it can retrace even lower again.
Yeah, the negativity around copper on the breakdown of what's happening in ESG, of course, the question marks about that demand growth picture out of China. MLive managing editor Mark Cudmore, thank you. OK, speaking to lawmakers yesterday, then Fed Chair Jay Powell gave his clearest acknowledgement yet that a recession was indeed possible in the US.
Ongoing rate increases will be appropriate, expeditious progress toward higher rates. We know we need to have restrictive policy, and that's where we're headed. The American economy is very strong and well positioned to handle tighter monetary policy.
If interest rates go too high, too fast, it could drive us into a recession?
It's certainly a possibility. The other risk, though, is that we would not manage to restore price stability and that we would allow this high inflation to get entrenched in our economy. Price stability is really the bedrock of the economy. We must restore price stability, and we will. The public should believe that we will get inflation back down to 2% over time. We are strongly committed to restoring price stability. We do understand that it is the thing that we need so that we can get back to the kind of labor market that we all want.
Okay, let's get into the key market drivers now with our MLive editor, Eddie van der Walt, and Didier Borowski as well from Amundi Asset Management, head of Global Views. Eddie, let's start with you. We saw this in the presser as well from Jay Powell, edging closer to conceding that a recession is becoming more likely. And he seemed to clarify that in his statements to Congress. What is your assessment of where things stand in terms of how Jay Powell, the FOMC, are thinking about the recession risks now?
Well, look, I think what Powell was really saying, that a recession is a price worth paying for, if you pardon the pun, price stability. I think he's saying that, look, we really need to get inflation under control, and if that means a little bit of a hard landing, so be it. Because you know what, the one thing that he said over and over again that we heard from that clip was price stability, and I think that's their absolute primary goal at this moment in time. And I think that therefore, you know, they will accept a little bit of softness in the housing market. You know, obviously they don't want to crash the economy, but I think they will settle for a couple of periods of negative growth, even in the US, if that means they can put price pressure under control.
Okay, and you talk about the housing market, and we're seeing, of course, mortgage rates in the US get to around 6%, and, of course, sales starting to soften as well. Didier, let's bring you in at this point. What is your assessment of the recession risks in the US? And if you do see a recession, as Will Dudley, of course, formerly of the Fed, says is looking inevitable now, if you do see that recession, what form does that recession take in your view?
Well, we don't expect a recession, I would say, in the best case scenario. That said, we fully agree with what Chair Powell said yesterday. It's a distinct possibility. The first sequence in terms of monetary policies to anchor inflation expectations. It's a very hawkish stance, so they will continue to hike rates aggressively in the short run. And if you look at the yield curve, for instance, it's likely to invert by the end of 2022 or early 2023. And the fear of a recession will remain there. Not immediately, I would say, but for late 2023 or 2024. So my point is that from a financial market perspective, that's true that it is a sword of Damocles if financial conditions start tighten too rapidly. That being said, I think we must be clear. It's quite easy in the short term to be very hawkish when inflation has not peaked and growth fundamentals remain quite solid. And it's another thing to continue to hike rates aggressively, I would say, in the second half of the year, when inflation will slow, even if it's a mild slowdown, and if GDP growth slows. So our point is that the Fed is likely to be much less hawkish in the coming months, in the second half of the year. But do not forget, the first sequence in terms of monetary policy has not ended. It's very hawkish, and the Fed will continue to hike rates aggressively in the coming months.
Well, that comes down to the point, doesn't it, which you've illustrated, which is the stomach. How much stomach does the Fed have to drive down growth as they try to tackle inflation? And do you think in the market pricing, because we're starting to see now markets pricing, that maybe you get to peak rates towards November this year, and then possibly you get a pause or you get some kind of drawdown from the Fed? How are you assessing the kind of rate trajectory on that, Didier?
So first, 0.70, like 0.075 in July, and after the Fed will diminish the pace of rate hike, 0.50, 0.25, etc., reaching 3.5 and 3.75% in early 2023. My point is that at some point the Fed will probably adopt a hawkish stance. We organized our Amundi Global Investment Forum 10 days ago, and there was a key question that was raised. Is Jay Powell likely to be Arthur Burns, like the Fed chair during the 70s until 78, 79, or someone like Paul Volcker? He seems to be someone like Paul Volcker in the short run, and we agree. That being said, we disagree that it will continue to hike rates as aggressively in the second half of the year when GDP growth will start to slow. We expect subpar growth, and it's another environment. If inflation starts to slow, if GDP growth starts to slow at the same time, probably the pressure on the Fed will not be that high. And with this inversion of the yield curve, you will have this recession rhetoric that will stay for sure intact in the coming months.
Okay, so Paul Volcker, I love that. Paul Volcker in the short term, maybe Arthur Burns in the longer term. Eddie, let's bring you back in at this point then, and taking what we've heard from Didier in terms of the assessment of the trajectory from the Fed and overlaying that to the energy space. Oil under pressure again today, Eddie. Are we starting to see signs of demand destruction?
Yeah, you know what? I think we are a little bit. I think certainly the market is pricing the possibility of demand destruction, but we are seeing that U.S. consumers and others, you know, are attempting to drive less. Of course, you know, it's very hard to drive less when people need to go to work and so on. But right now in the work from home environment, you know, people have the option and they're saying, look, I'm going to stay at home. I'm going to not fill up the tank quite as often. I think that question about whether, you know, we are going to see a Volcker-esque Powell in the short term is, you know, I think what's a bigger question is the economy ready to stomach a Volcker in the short term? And I don't think it is, right? I think we are seeing it in things like the copper market, in things like the oil market, where we're seeing, you know, the commodities market, which had kept really strong throughout all of this, just starting to back off a little bit now.
Eddie, just briefly before we let you go, your views on what we've heard from Germany now, activating phase 2 of their emergency energy plan. We know that we saw those gas cuts from Russia last week. What does this signal about the strain on the Eurozone economy and how Germany is attempting to shift?
Yeah, look, Germany has absolutely no choice here. I think Germany would just absolutely needs to fire up some of their coal plants because, you know, if they're not going to get natural gas, they're going to run out of, you know, they're going to run out of heating in the winter. But this winter is different from the last winter. This winter, they've had time to prepare for it, right? So I think that's a very different situation that we're seeing here. But the consequence is that, you know, in the short term, I think demand for coal is going to increase significantly, and we could also see, you know, companies like Glencore doing well with their large coal exposure.
Okay, MLive's Eddie van der Walt there. We'll continue that debate over Volcker versus Arthur Burns when it comes to the Fed and, of course, the impact on the energy and commodities complex, the announcement from Germany, they're moving to phase 2 of their emergency gas plan. Didier Borowski, Amundi Asset Management Head of Global View, stays with us. We'll get more of his views and his calls in the next couple of minutes. Right, coming up, recession concerns whipsaw markets, as we've been discussing. We'll look at how Europe is faring and continue our conversation with Didier from Amundi Asset Management. Again, we'll get more of his calls in the next few minutes. Stay with us. This is Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันน็อตสูงสุด 76%
We see you
for who you are and who you can be.
We want you to unlock your potential
and change the course of your future.
We can help you grow, whichever way you decide.
So let us welcome you to your new home.
Because we see opportunity.
We see potential.
We see you.
The University of Central Lancashire.
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. 50 minutes into your European trading day, you're seeing losses of 0.9% across the benchmark. We still have some redheads and breaking news now, some data out of France, PMI data for the month of June, and it is a miss. It's a miss for both the manufacturing PMI and the services PMI. Let's start with manufacturing then. The data coming in for the month of June at 51, so still just about in expansionary territory, but well below the forecast of 54. And let me just check in on where this relates then historically. I'm just looking back through the recent numbers, and that is the lowest print, I believe, since early 2021 then for manufacturing out of France. That is the softest print that we've seen since around January of 2021. When it comes to services, the number is 54.4. So again, comfortably in expansionary territory for services, but below the forecast of 57.5. So pretty solid misses in terms of the services and manufacturing PMI out of France, just giving a sense of the softness that you're starting to see in this Eurozone economy, and the challenge, of course, for Madame Lagarde of the ECB as she weighs up the inflation risks and, of course, the challenges and the drag then on the economy. So just recapping, 51 for June manufacturing PMI out of France. The forecast had been for 54. Let's get some analysis then from Didier Borowski, Amundi Asset Management Head of Global Views. Didier, what do you make of this data and your assessment, how it rounds out your assessment of the health or the lack of health of the Eurozone economy?
The Eurozone economy is on the verge of a technical recession, so we are not that sure that we'll see a technical recession with 2 consecutive quarters in negative territory, but basically we are very close to economic stagnation for the coming quarters. So clearly demand is under pressure, much more than in the United States. The ECB will have less room for maneuver to normalize its monetary policy in this environment for sure. So and we don't rule out, and that's very important for equity markets, we don't rule out an earnings recession in the Eurozone, which is not at all priced in by markets as of today. So we really need to be cautious when it comes to Eurozone fundamentals. You know, the war in Ukraine has been a huge shock on commodity prices, and it's an asymmetric shock with the Eurozone and Europe, which is the first region which is hit by this crisis. And we see the consequences, I would say, of this huge commodity shock on commodity prices.
Indeed, and we're starting to see the pressure, of course, on the single currency as well. Euro-dollar, euro moving lower on the back of this significantly weaker data out of France. Didier, what is your assessment? Your underweight equities, what do you need to see to change that view?
Well, the fact is that we believe that many analysts are still too optimistic when you look at the earnings forecast. We continue to believe that earnings will be under pressure. That's true, as I said, in the Eurozone. That's also true in the United States, where margins will get under pressures, where global demand is set to slow. And in these conditions, and in addition to that, we must acknowledge that we will see a higher level of structural inflation in the medium term. And in this environment, the derating of global equity markets has not ended yet, we believe. You have, on the one hand, the downward pressure on earnings that is still not well priced in by markets. And on the other hand, the global derating related to a higher level of inflation that has probably not ended. So we really need to be very, very cautious. It's really too early in the cycle to say that it's an entry point. So we need to be very careful. And we need to be very careful because also volatility is very high, in particular on bond markets, which is not something which is traditional and which is clearly related to the uncertainty regarding monetary policies.
Yeah, indeed. We continue to see that very high and pronounced volatility. The derating of the equity markets is not over yet. That is the call from Didier Borowski. Thank you. We appreciate your insights, as ever, from the Amundi Institute, Head of Global Views. OK, let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. JP Morgan is laying off hundreds of US staff who work on mortgage lending and reassigning hundreds more this week. Bloomberg has learned the total affected will be more than 1,000 workers. Rapidly rising US mortgage rates have driven down demand in what had been a red-hot housing market. China has approved a plan to promote what it calls healthy development of the payment and fintech sectors. A meeting chaired by President Xi Jinping also backed enhancing regulation of major payment platforms. Beijing has promised to unwind a sweeping crackdown on tech companies that ensnared sectors from online education to gaming. That's the Bloomberg Business Flash. Tom.
OK, Laura, thank you very much indeed. Coming up, Tesla burns money, as Elon Musk says. The company's new plants in Berlin and Austin are losing billions. We'll get the details on that story next. This is Bloomberg.
บทแจ็คพอตแต่ไม่จุกด้วยประกันสุขภาพเหมาจ่าย Signature Care จาก Cigna.
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg. Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open. 23 minutes into your European trading day, and some weak PMI data out of France pushing the broader benchmark lower here in Europe by almost a little over 1%. In fact, the CAC is lower by 62 points. You've got the euro-dollar, euro under pressure, down 0.3%, and there's a move into sovereign debt, particularly bonds. You're seeing a marked move there, and yields lower on German debt as part of this risk-off mood. On the back of that weaker than expected French data. Let's get to what's happening with Tesla then. Elon Musk says the company's new plants in Berlin and Texas are losing, quote, billions of dollars. That's as the electric vehicle maker tries to ramp up production. Let's bring in Bloomberg Craig Trudell. Craig, why is it difficult then for investors to break down and pass these comments from Musk? What should they be making of this seemingly warning sign, or sounding off a warning about what's happening at these factories by Musk?
Yeah, what's tricky about these comments is they were filmed all the way back on May 31st. So it was a little bit of a curious decision by the group that conducted this interview with Musk. It was the Tesla owners of Silicon Valley that waited to post this just not until Wednesday. And so obviously a few weeks have passed since then. it's hard to sort of, discern just how much has changed in those few weeks in terms of whether Tesla has, managed to sort of smooth out some of the challenges it was having with ramping up these factories. But what we do know is that in Shanghai, that there has been some spooling up of production there. Of course, these comments were more so, focused on the factories in Germany and Texas that are brand new. And there were sort of, red flags going into those plants starting production that it was going to be tricky. The company is trying new things, new types of battery cells in Texas that they're trying for the first time, a new style of sort of, installing the batteries in a structural way underneath the vehicles. And so, going in, there was, sort of some warnings by Musk to sort of set expectations, for the idea that it was going to take some time for these factories to get up and running and may not, they may not ramp up as fast as Shanghai did.
Yeah, Shanghai probably set a pretty high bar on that front. Craig, what does this mean kind of longer term for the production challenges of Tesla? Musk has said how much demand there is. Just briefly.
Yeah, so it's going to mean that they're going to be highly reliant on Shanghai for the foreseeable future, and of course California, the other plant, and they really need to sort of prove that they can get that new type of battery up and running in order to sort of reach the kinds of volume objectives that investors have been sort of baking into the stock over the last year.
Okay, Craig Trudell on these latest comments from Elon Musk about the challenges for those production and factories in Berlin and Austin, Texas. Thank you. Coming up, the odds of the Fed's rate hiking cycle extending beyond the November policy meeting, well, they've diminished sharply as traders continue to reprice the prospects of a hard landing. Stay with us. More next. This is Bloomberg.
Stay at the surface, and the surface is all you'll see. Essential intelligence from S&P Global takes you deeper, where a more prosperous future is yours for the seeking. S&P Global. Seek and prosper.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการล้อนดีราคาถูก
We see you
for who you are and who you can be.
We want you to unlock your potential
and change the course of your future.
We can help you grow, whichever way you decide.
So let us welcome you to your new home.
Because we see opportunity.
We see potential.
We see you.
The University of Central Lancashire.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
What do Formula One cars and your local supermarket have in common? Well, strange as it sounds, they might both be using the same technology. A lot of innovation has trickled down from the world of high-tech engines, and it hasn't just found a new life in road cars. F1 cars have long been thought of as the peak of cool, and technology in them is also helping to cool down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors' Championships and working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's KERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at TERS, or a thermal energy recovery system, looking to harness the heat produced from braking and the engine exhaust. That could allow cars to generate the same power using 30% less fuel. So while F1 may have a reputation as a gas guzzler, some of its innovations in the name of speed are helping in the everyday fight against climate change.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. Jay Powell tells Congress a recession is possible, as steep interest rate hikes will make a soft landing very challenging. He appears before lawmakers again today. Stocks and futures lose ground as growth fears occupy the forefront of investors' minds. Bonds rally and the euro falls on the back of big misses on French PMI. We have the German PMI data also coming in as a miss for the month of January, both manufacturing and services. We'll detail that for you shortly. Elon Musk says Tesla's new plants in Berlin and Austin are, quote, giant money furnaces, losing billions of dollars just days after clarifying to Bloomberg that he plans to cut 3.5% of its global workforce. Let's bring you back to that breaking German PMI. It's a redhead across the terminal. And as I mentioned in those headlines, it is a miss when it comes to manufacturing data for the month of June out of Germany. 52 is the number. The forecast was 54. And in terms of services PMI, that fell to 52.4. The forecast was 54.5. Let me give you some historical context for the manufacturing data then, that number of 52. Again, the forecast was 54. Let me bring you back to the lowest point that we saw then. That seems to be the weakest print since, if I'm getting this right, just looking at the terminal, since around August of 2020. That is the weakest print then in terms of manufacturing data and PMI out of Germany, it appears, since around August of 2020. So another miss, building on the misses that we saw out of France. And you've seen a big move then into German debt. And you're seeing yields lower, price up on German debt. Euro under pressure, down now 0.5%, 105 on euro dollar, 1.5 on the German 10-year. Look at that, a 12 basis point move lower as money goes into German bonds, safe haven bids. The DAX currently trading lower by 1.3% and the broader benchmark lower by 1.2%. Let's get some analysis then and reaction to this data with Christian Keller, Head of Economics Research at Barclays Bank. And what an opportune moment to bring you in, Christian. What is your take then on the data that we've seen out of both France and Germany?
Good morning, Tom. Yeah, unfortunately, we think it's a harbinger of things to come. We have been turning quite pessimistic on Europe. And mind you, we went into this year thinking this would be Europe's year, coming out of the pandemic with NGU and all this, support from the EU. This has turned dramatically. Europe is clearly the region that suffers most from the war in Ukraine, from the high energy prices, from the supply chain disruptions in China. And, we now see actually a mild recession in the fourth quarter and the first quarter next year for Europe, i.e. coming the winter. And I think what we're seeing here is clearly signs we could see earlier already. Manufacturing was strong, but it was basically working off the backlogs of past orders. Orders going forward, new export orders, etc., were already slowing. And even though the services were supposed to rebound, and we think, the summer will bring tourism, etc., but, there's a massive loss of real income for consumers. Consumer confidence, if you saw that yesterday, fell very, very deeply by the European survey. So this is unfortunately pretty much a perfect storm for Europe, really.
The perfect storm for Europe. Is this a demand problem then, Christian? Is this the lack of strength within the consumer base across the Eurozone? Or is this a pricing problem, an input and cost problem, an energy problem for the manufacturers?
Unfortunately, I think it's the two coming together. I think, it's certainly a massive supply shock when it comes to energy. Natural gas prices in Europe, I don't need to mention to the audience, but, they're very high. That's a massive supply shock. But at the same time, as inflation is now 8-9%, in some countries actually double-digit in the euro area, the consumer obviously feels this as well. So it's turning into the demand problem as well. So really, it's the ugly thing about it. It's a combination of the two. And obviously, we have a central bank that needs to address inflation, will start hiking rates, and that means that we're seeing a tightening of financial conditions. So it's really everything coming together.
Do you think any of the data today at all changes the calculation of Madame Lagarde and the ECB?
This is, I think, the unfortunate situation that central banks are in, not only in Europe, but elsewhere. They have to address inflation, and they have to, I think for the ECB, they will have to get out of the negative rate, regardless of the fact that they see a slowing economy. I think they will make the moves in July and also in September. We see afterwards, but I think the two moves in the next two meetings are pretty much baked in.
We talked a lot and we heard a lot about corporate strength during the pandemic as companies became and made their operations leaner, built out their balance sheets. To what extent is there resilience still in European corporates?
I think this is a good point, and this is why when I just told you that we are looking for mild recession coming in the winter, it is one of those recessions where consumers will cut back as they feel the real income shock. But we don't think there's really much hiding in the balance sheets. We don't think that there's a larger exposure that corporates suddenly could things could turn out uglier than we already foresee. So I think it's a good point that balance sheet in general are quite robust, and I think that remains to be true.
Unlikely to see skeletons in the closet when it comes to these balance sheets.
Exactly.
If we overlay the risks of Russian gas being further cut into the Eurozone, presumably that changes your view on a softer recession in the second half of this year.
Yes, unfortunately, that would be. Right now we're seeing disruptions. We are already watching very, very carefully the fact that Russian gas supplies have started to sputter, so to say, in the last few weeks, which means probably that Europe cannot fill their storages over the summer as they were planning to. And if you get to true rationing of energy in Europe, in particular in Germany and Italy, and I know that there's a lot of diverging views on how bad it would be, but it would, in our view, pretty certainly a recession for Q2, and it would be deeper than what we forecast now. Because once you have to cut off production, there's no doubt that you would get possibly several percentage points of a recession in a country like Germany.
And when it comes to the single currency, 105 currently, down 0.5%. Do we get to parity, Christian? And how much of a challenge would that pose for the ECB and indeed policymakers across the Eurozone on the back of these very high levels of inflation?
That's a very good point, because I think we heard from the ECB, obviously, for the first time in the last few months, that they were getting concerned about the currency. I mean, indirectly, they, of course, refer to the pass-through. A weak currency means for these energy prices that are already elevated and other imports. And that is another reason why they have to tighten from here. We see actually the euro in the next few months going weaker. I think our forecast is 102. I think if it came to a proper cutoff from Russian gas in the kind of deepest recession scenario that I just alluded to, we could see parity and below. I think that is possible. The dollar overall looks overvalued by most measures, but the dynamics in the global economy and all these shocks that are looming are unlikely really to weaken the dollar in the next few months, in our view.
Christian Keller, Head of Economics Research at Barclays Bank, on the perfect storm facing the Eurozone. Thank you for your analysis this morning, breaking down the data we're getting out of France and Germany. Coming up, EU leaders later today are expected to grant Ukraine candidacy status, paving the way for the country to join the Union. We've got more on that story next. This is Bloomberg.
บทฟาดเคราะห์แต่ขำๆด้วยประกันสุขภาพเหมาจ่ายซิกเนเจอร์แคร์จากซิกนา
We see you
for who you are and who you can be.
We want you to unlock your potential
and change the course of your future.
We can help you grow, whichever way you decide.
So let us welcome you to your new home.
Because we see opportunity.
We see potential.
We see you.
The University of Central Lancashire.
You will put a woman on Mars. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Welcome back to the Open. We are 41 minutes into the European trade day. Sharply risk-off moves that we're seeing as investors assess the data coming out of France and Germany. Barclays saying it is the perfect storm now for the Eurozone. Losses of 1.3% across your equities. Sharp moves lower in terms of yields across bonds. Moves of money into that debt on this safe haven move. The euro under pressure, down now 0.6%. Speaking of the euro, European Union leaders are gathering in Brussels, where later today they are expected to grant candidate status to Ukraine, along with Moldova and Georgia. For more, we are joined by Bloomberg's Europe correspondent Maria Tadeo. Maria, we could see potentially what would be an historic move then today if EU leaders approve granting this candidacy status for Ukraine. Is that likely, and what would that actually mean practically?
Well, Tom, I would say it's very likely. And we just heard from the German Chancellor, of course, Olaf Scholz right now, who gave a very clear indication in terms of the way that things are going to play out. He did say Ukraine, of course, has done the work for this. Remember, a week ago, he, alongside Emmanuel Macron and Mario Draghi, went to Ukraine. The head of the commission has been there now multiple times. And of course, the idea is that they will now endorse this candidacy for Ukraine, which, of course, is a boost of morale for the country in the midst of this war with Russia. It also shows how much things have accelerated as a result of the war in Ukraine. This has been a long-time aspiration for the country that is now really manifesting itself as a result of the war. Now, in terms of the practicalities, the reality is, Tom, there's a big difference between being a candidate country to the EU and being a full member to the EU. And of course, that can take a very long time. The Ukrainians know this. There will be conditions on things like rule of law, corruption. All of this is very well known. And of course, reforms that will have to take place in the country. But over the short term, this is the win that Ukraine wanted to see politically, and is a symbolic move, of course, that the European Union is now willing to grant the country in the shift away from the Russian sphere of influence into Western Europe.
OK, so a political win for Ukraine looking pretty inevitable, as you say. Of course, the issues around energy security, front and centre as well for officials there in Brussels. Germany moving to stage 2 of its emergency energy or gas plan. What do we know about how the discussions are unfolding there and the question of energy security?
Well, listen, Tom, this is not officially on the agenda, but I can tell you it really is a topic on everyone's minds here. There's really serious concerns that we could now see escalating unilateral moves from Russia. Remember, there has been a continuous decline in supply to countries like Germany and Italy. Perhaps that is a warning shot in terms of what to expect for the winter and the storage ahead of the winter. Remember, this is the most vulnerable time of the year for the European Union, some of them entirely depending almost on Russian gas. So this is a serious concern. They worry about potential outage, but also full-on retaliatory measures from Russia and a real rupture in terms of the supply. So this will be, again, not officially on the agenda, but this is a real concern for them. And you talked about this perfect storm that's about to hit the European Union. Well, they really worry about the impact of this, especially as we enter the winter.
OK, Bloomberg's Maria Tadea on the ground looking at that Ukraine candidacy status and, of course, the discussions, unofficial even as they are, around energy. Right, let's turn our attention further to what's happening in commodities. Oil hit again amidst growing recession angst. And, of course, Jay Powell admitting that a recession is a risk now for the US. For more, we are joined by Bloomberg Executive Editor for Energy and Commodities, Will Kennedy. Will, let's start with what's happening in Germany, the move to phase 2 in terms of its emergency gas plan. What does that mean in practice? And how are they hoping to shore themselves up in the eventuality, if it does come through, that Russia further cuts supplies?
Good morning, Tom. Yeah, so stage 2 is stage 2 of 3. They've outlined different phases they go through as the gas crunch gets worse, and it signals that Germany believes there's a likelihood of sustained disruptions to supply in the coming months. This is, of course, after supplies on the Nord Stream 1 pipeline, the main link between Russia and Germany, fell to 40% of its normal levels. In practice, it will mean that Germany may be able to pass on higher oil and gas costs to consumers in a way that would previously have been illegal. So it would perhaps mean constrain demand and help out oil and gas and power suppliers. And it may allow them to turn on more coal-fired power plants, something they flagged up a few days ago. The idea of bringing coal-fired power plants that had been scheduled for decommissioning out of mothball state and use them to replace generation from gas-fired plants, which won't have as much gas available.
OK, so that on how Germany is trying to kind of shore up its defences around any potential further cut to gas. When it comes to oil, Will, we're seeing further pressure on Brent WTI this morning. Are we starting to see signs, do you think, of demand destruction, or is this a knee-jerk reaction to the risks around recession?
Yeah, it's been quite a dramatic sell-off. I mean, we're down more than 20% over the last few weeks, which is the definition of a bear market. I do think it's quite a difficult market to read right now. This selling off is coming in a market that's been volatile all year and where liquidity hasn't always been as strong as it has been historically. There are players who are reluctant to trade this market. But clearly it's telling us something. It's telling us that there are investors out there who think that the rally may be done, that there are good macroeconomic reasons to take money off the table, and that, you know, the market isn't as strong because of the recession fears that you mentioned. On the other hand, when you look at the physical market, that still looks tight. When you look at the prices people are paying for diesel, in the UK right now, we're paying a record for diesel, £2 or thereabouts, so a litre. That's not a sign of a softening market, and that's not a sign of a market that's about to give inflation a hand. So there may be early signs of demand destruction. You've got to think at those sort of prices. People are going to think about driving a little less, but I don't think it's abundantly clear. And refiners are still producing all the fuel that they can, and inventories both of crude oil and fuel around the world are still dropping. So perhaps, but it's one for the future, and right now it's too early perhaps to say that we are seeing the demand destruction that you mentioned.
OK, as ever, excellent. Thank you, Bloomberg's Will Kennedy, for breaking down what we're seeing across these energy markets. Oil now technically in a bear market. Let's check back in on what's happening across the yield space. German bonds bid significantly. You're seeing yields down almost, let's check in on the 10-year, 14 basis points, but the action really at the front end as well. The 2-year German bund now yields lower by 18 basis points. So significant moves into German bonds. A flight to safety. The euro dollar also lower by 0.5%. Is this going to challenge then Madame Lagarde, the ECB, as they've reiterated their determination to press ahead with hikes in both July and September? They, of course, have yet to hike, but it was that weaker data in terms of manufacturing and services, both out of France and Germany. Barclays saying the Eurozone now faces a perfect storm, but there's significant moves within these bond markets. We'll continue to keep across them for you. Let's get the first word news now with Laura Wright. Laura.
Thanks, Tom. Federal Reserve Chair Jay Powell has given his most explicit acknowledgement that steep rate hikes could tip the U.S. economy into recession. He told the Senate Banking Committee that achieving a soft landing will be very challenging. Powell restated the need to ensure that high inflation doesn't get entrenched in the economy. The Taliban's supreme leader has made a rare public appearance to plead for international aid after a devastating earthquake hit Afghanistan. At least 1,000 people have been killed and hundreds more injured after the 5.9 magnitude quake hit the southeast of the country. The disaster risks a new humanitarian crisis in a country already facing hunger and a crumbling economy. Almost 1 in 5 US adults who have had COVID-19 are currently experiencing symptoms of long COVID. The survey by the US Census sheds light on how frequently symptoms linger 3 months or more after the initial period when people are sick. Around 40% of Americans reported ever having had COVID in the survey. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Tom.
Laura, thank you. Coming up, JP Morgan lays off hundreds of staff in what has been a red-hot housing market in the US. More on that next. This is Bloomberg.
บทนอนยาวแต่ชิวๆด้วยประกันสุขภาพเหมาจ่าย Signature Care จาก Cigna.
We see you
for who you are and who you can be.
We want you to unlock your potential
and change the course of your future.
We can help you grow, whichever way you decide.
So let us welcome you to your new home.
Because we see opportunity.
We see potential.
We see you.
The University of Central Lancashire.
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody uses my knife, I want them to say, damn! Golly, this is a badass knife. Come here, let me show y'all something.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question.
Great question. Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. 52 minutes into the European trading day. Pronounced risk off. We're assessing, of course, the comments from Jay Powell, who admits and concedes that there is now a risk of a recession in the United States. Meanwhile, here in Europe, you're looking at data from Germany and France. Manufacturing and services coming in much weaker than expected. Pressure in the Eurozone. What it means for the ECB. You've seen significant moves into German debt, German bunds, and yields there on the 10-year German bund down 13 basis points. 15 basis points move lower on German 2-year as you see a bid for German debt as this risk-off mood solidifies. Euro-dollar is weaker. The euro-dollar is down by 0.5%. And across the benchmark equity space, you're looking at losses then of 1.3% currently in the session. OK, let's take a look at some of the other things to watch out for today. 10:30 a.m. UK time, the EIA will publish its latest crude oil inventory report. That's as the oil market, as Will Kennedy was telling us, is now technically in a bear market. Then at 1:30 p.m. we will have the US initial jobless claims data. We'll see how that forms the FOMC. That is followed at 3 p.m. by a summit of European leaders in Brussels, where they are due to discuss energy, the cost of living, Russia's invasion of Ukraine, and the membership applications of Ukraine, Moldova, and Georgia, as Maria was telling us. At 9:30 p.m, the Fed reveals the results from its annual bank stress tests. And later today, Fed Chair Jay Powell testifies before the House. He testified in front of the Senate yesterday. Today, it's the House Financial Services panel, listening out, of course, for anything else he has to say about the recession risks. OK, let's talk about how inflation is impacting not just consumers, but the banks as well. We have the stress tests, of course, but we also have mortgage rates in the States now around 6%. JP Morgan is laying off hundreds of staff in their US home lending unit as rapidly rising mortgage rates drive down demand in what had been a smoking red-hot housing market. Tom Metcalf joins us for the details. What does this tell us, the case of JP Morgan, illustrate to us about what is happening in the housing market in the US? Is this a one-off? Are we seeing this more broadly now as we start to readjust in terms of that demand and higher rates?
Yeah, well, it's that adjustment we're seeing and that real-world effect. You know, obviously you've seen these interest rates rise, and here's what kind of the real business impact is. So JP Morgan, enormous lender, particularly in mortgages, and it's cutting, I think, about 1,000 jobs from its mortgage business, and about 500 of those aren't coming back, so it's reallocated, you know, about half of it.
And prices are coming down, rates are going up. Is there variance across different parts of the US, and is there variance in terms of how different lenders are adjusting to this? How long do we expect this to continue, and how closely tied is it to what's happening with the Fed?
Well, it's obviously directly tied, obviously, the wider economy as well. I mean, you look back, it's been a very hot housing market, so some of this is just a sort of natural, you know, cooling off. But it's interesting to hear those Powell comments you mentioned, right? Doesn't sound like it's going to be a short-term fix in any sort of sense of the word. Yeah. So suspect this will just be the start of many kind of painful announcements like this for lenders. OK, so this is JP Morgan. You expect others to come out. Have we heard from other lenders at this point? How many other businesses are starting to pull back and cut staff? Yeah, the other big one was Wells Fargo. So that's actually the US's biggest lender. So they've done something similar. And then also firms that people may not have heard of, Redfin, Compass, they're all in the sort of mortgage business. And they too have similarly said, hey, we're retrenching, we're cutting jobs, we've perhaps overexpanded in the good times, and now we need to get back to the right side.
So retrenching, as you see these much higher rates in the US around mortgages, and of course that softer demand, at least in some parts of the US market. Tom Metcalf, thank you, on the impact on the banking space there on a day when, of course, you're going to have those stress test results as well from the Federal Reserve. Let's check in then on the markets before we wrap up European market open. And you're seeing, again, as I said, risk off. You're down 1.3% across the European benchmark. Future stateside pointing to losses between 0.6% on the S&P minis, 0.4 on the Nasdaq futures. You've been a significant move into sovereign debt, particularly the sovereign debt of Germany, where you've seen 16 basis point move lower on the 2-year, 14 basis point move lower on the 10-year. Stay with us. Surveillance Early Edition up next. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
We see you
for who you are and who you can be.
We want you to unlock your potential
and change the course of your future.
We can help you grow, whichever way you decide.
So let us welcome you to your new home.
Because we see opportunity.
We see potential.
We see you.
The University of Central Lancashire.
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
but there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data.
I would say we have a 50% likelihood of a recession globally, but also in Europe.
I would expect a mild recession like 1990 or 2001, not a deep recession like 73, 74, or of course the great financial crisis.
It is going to be very challenging. It has been made significantly more challenging by the events of the last few months.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London, standing in for Francine Lacqua. And here's what's coming up on today's programme. Jay Powell tells Congress a recession is possible as steep interest rate hikes will make a soft landing very challenging. He appears before lawmakers again today. Stocks and futures lose ground as growth fears mount, bunds rally, and the euro falls on the back of big misses on European PMIs. And Elon Musk says Tesla's new plants in Berlin and Austin are giant money furnaces, losing billions of dollars. That just days after clarifying to Bloomberg that he plans to cut 3.5% of its global workforce. Let's check in on the markets and bring you some breaking news. It's been a big day for breaking data. We've had misses when it comes to Eurozone, manufacturing and PMI data. Let's start with France and Germany. Those are both misses. In terms of the top line when it comes to the Eurozone, just bringing you the numbers then. Eurozone manufacturing for the month of June, 52. That's a big miss from the previous month, and it's a miss from the surveys as well. The expectations had been you'd get 53.8. The actual number across the Eurozone when it comes to manufacturing is 52, significantly down from the previous month as well. 54.6 was the number in May. So it's 52 for June, Eurozone manufacturing. When it comes to services, also a significant miss, 52.8. The surveys had seen 55.5. And we have another surprise in the central banking space. Norges Bank raising its benchmark interest rate to 1.25%. The estimates had been 1%. So it's a surprise move by Norges Bank in Norway. Again, as central banks reassess the impacts of inflation and the potential drag on growth. It's a surprise move by Norges Bank. And softer data, further soft data out of the Eurozone. We had Barclays earlier saying that the Eurozone now faces a perfect storm. We are joined now for analysis by Andrew Balls, CIO for Global Fixed Income at PIMCO. Also with us, our European economy reporter, Alexander Weber. Alexander, let's start with you on the data that we've had, the surprise move, I should say, out of the Norges Bank, a higher rate move out of Norway. What does that signal to you about concerns about inflation and how far and how hard these central banks need to go?
Well, so Norway hiked by 25 basis points. It's not as strong as the 50 basis points that the ECB is honing in on, and even further away from 75 basis points that the Fed hiked. It's the interest rate is a relatively effective tool in Norway, so it didn't have to go as far, but it shows clearly the determination by central banks to get inflation under control, even as growth concerns mount.
Okay, so in fact, they did hike by 50 basis points. The rate came into 1.25%. The estimates had been for 1% in terms of rates out in Norges Bank. So it was a 50 basis point move. Andrew Bulls, just great to have you on a morning full of data. And of course, that surprise move by the Central Bank of Norway. What is your assessment at this point, Andrew, of recession risks and whether central banks are going far enough and fast enough to address them?
So recession risks are very elevated. I'm not quite sure it's the 100% the baseline, but it's very high risk compared with normal times of recession in Europe, recession in the US. I don't think the central banks have got a great deal of choice. They need to tighten policy given where inflation is. This is something that we haven't seen for some time in response to high food, high energy prices. Central banks unable to look through it because the latest shock came, on top of already elevated inflation. In the US case, I think it's quite like you have a recession given the extent of the inflation. And the strength of the labour market, the Fed needs to slow the economy, needs to get unemployment up in effect, and it's hard to do that and achieve the soft landing. On the European side, more of the inflation is from external factors. There's less in terms of excess demand growth in Europe, but it's certainly uncomfortable for the ECB, an inflation targeting central bank, to have inflation at these levels. Big constraint, of course, in Europe is the periphery, not only recession risks overall, but the sovereign-related risks, which complicates it further for them.
Well, indeed, and on that point, we're seeing significant moves into not just German bonds, but also Italian debt as well today. The Italian BTP yields down 11 basis points, currently at 3.43. German bond 10-year, 1.49, a 14 basis point move there. Is this just a significant risk-off move that we're seeing here in Europe, or is this a challenge to the ECB and the commitment to hikes in July and September?
So I personally think a lot is priced in for the ECB. The ECB didn't actually manage to hike rates in the last cycle. The economy's skirting close to recession, and there's less underlying inflation. So a lot is priced in for the ECB. So I'm not that surprised that we should see markets taking some of that back, just given the weakness of the data. Italy and the rest of the periphery is a concern. The ECB, is going to be hiking rates. They need to hike rates. The higher beta countries, it's not a great surprise that their spreads would have widened. And we have a big question now: can the ECB come up with something credible in terms of an anti-fragmentation tool? If you look at the history of the last 10 years, it normally takes several missteps before they come up with something credible. Credit where it's due. They came out and announced their intentions to put something together. You've seen significant tightening of Italian spreads during, risk-off, difficult markets. But with ECB, the politics is always so difficult. Will they be able to come up with something to maintain, good progress here? Or will we have one step forward, two steps back, which, again, looking backwards, has tended to be the way the ECB operates?
Yeah, indeed, the challenge of politics as the Eurozone, and in fact the ECB, tries to confront that fragmentation risk. Alex, let's bring you back in at this point. We were talking to Barclays earlier. They talked about this perfect storm for the Eurozone in terms of growth and inflation. There had been some assumption that, yes, OK, manufacturing in terms of PMI is going to soften, but services should kick back in as a leg of support. And we're not really seeing that. Do you have an explanation for why services are so soft in the Eurozone as the pandemic weakens and people try to get out and spend more?
In one word, it's inflation. It's demand has softened considerably for services, and according to the business service by S&P Global that were just published earlier this morning, it all comes down to cost increases. People are very concerned about the energy bills. They are seeing daily staples getting more expensive on a daily basis, and therefore they're cutting back on recreation. Tourism has stalled the momentum. We could see some of that come back over the summer, perhaps. The holiday season is just beginning here in Europe, but it's the surprise weakening of demand was all due to cost increases. We saw Germany trigger phase 2 of its emergency gas plan today, which just signals how much concern there is about energy supplies and rising costs on that front, and that's just something that households can't escape, so they're cutting back on other expenses.
OK, European economy reporter Alex Weber on the data we had out of the Eurozone, softer than expected. Andrew Ball's very pleased to say from PIMCO, staying with us. We'll get more of his calls after the break. Just breaking live pictures now of the German economy minister. And of course, Alex was just talking about this, the challenge around gas and energy in Germany. This is the economy minister, of course, addressing those concerns, saying that Germany faces now an energy crisis. They are moving to phase 2 of their emergency gas plan. It is a 3-phase plan. Russia, of course, cutting gas significantly last week. And we know that Germany is trying to shore up its supplies, even moving to fire up coal-fired power stations. So this is Germany's economy minister addressing and giving a press conference there, saying Germany will activate additional coal-fired power stations. Again, pretty remarkable from a member of the Green Party. Coming up, we will be taking and talking US politics with Moelis Vice Chairman and former US House Majority Leader Eric Cantor. Do not miss that conversation. It's a little later in the show. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการล้อนดีราคาถูก
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
We are all unique. Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. OK, PIMCO says it sees an elevated risk of recession over the next 2 years. That is due to geopolitical instability, stubbornly high inflation and reduced household disposable income. It also says it sees positive returns on most bond benchmarks over the secular horizon. Andrew Balls from PIMCO is still with us. Andrew, you've talked about resilience, the need to build in resilience in an increasingly volatile era, an area and a time frame when there's going to be less fiscal impulse. How do you start to build that resilience in?
Well, firstly, I mean, I think you wouldn't be surprised, PIMCO, to say this, but we think the bonds have a key role to play in overall asset allocation. We've seen this, difficult period for all financial markets this year, but you now see bond yields at, pretty attractive levels compared with, the past several years. And given the extent of central bank hiking priced in, there's also the potential for bonds to not only provide the returns, but the protection in the event of recession. And we do think that recession, as we discussed previously, is quite elevated in terms of the risk in the US and in Europe. So better starting valuations amid what has been a difficult time in markets these past months, and the important protection in the event of downside risk, and then more broadly build resilience in terms of your asset allocation, your fixed income portfolio as well. Fairly cautious on credit. One thing which is going to happen is if we are going into recession, central banks are not going to be able to cut rates quickly. Fiscal policy probably is not going to provide a lot of support. So in contrast to the last 10 years where central banks were suppressing volatility, supporting asset markets, we think it's going to be a lot more difficult going forward.
OK, there's a lot to unpack there, Andrew, and it's great because we have no shortage of topics on which to focus. Is the 60-40 portfolio mix then back? And when it comes to, Andrew, when it comes to what you find attractive within the yield space, within the bond space, is it the short end that's looking more attractive? Just wondering if let's see if we still got you, Andrew, because sometimes we do have these tech difficulties on live TV. Andrew, can you hear me OK? Andrew, just checking you can hear me OK. OK, it seems we're having technical issues then with Andrew Balls, CIO for Global Fixed Income at PIMCO. Of course, their view, in fact, is that you could get to around 4% on the US 10-year. But as Andrew was saying, there are opportunities now, he sees, to add bonds, cautiously optimistic on things like credit as well. But they do, of course, and do say you need to build in resilience to your portfolios amid these higher recessionary risks. We will check in on the markets then, talking recessionary risks, becoming more pronounced, arguably, on the back of the data that we had, disappointing data out of the Eurozone. Manufacturing and services PMI for the Eurozone for the month of June coming in below the estimates. You've seen the euro pressured on this. Euro dollar currently trading at 105, down 0.5%. But really it's the moves in the bond markets that have taken most of our attention. The German 10-year, you're seeing yields lower by 13 basis points, 1.5 on the German 10. The German 2-year currently lower by 14 basis points. I think we have re-established the connection with Andrew Balls. So let's bring Andrew back in at this point. Andrew, we were talking about resiliency in your portfolio markets and your bond markets in terms of building out resiliency in these recessionary times. There's resilience as well from Andrew Balls in terms of reconnecting and coming back to us. Let me end with a final question. What are the biggest headwinds, potential headwinds, Andrew, in the second half of this year? The biggest tail risks?
Well, I think in the short term, it is the combination of high energy prices, demand destruction that's going to come from that, and I think that's part of the story you're seeing in the European PMIs. But central banks that are going to have to tighten policy, keep tightening policy, given inflation is too high and has been stubborn. And then beyond that, looking further out, I think a combination of central banks that can't ride to the rescue in the event of this recession. And then secondly, as we look out over the next several years, as a consequence not only of the prior COVID period, the prior China US trade wars, but now the Russia-Ukraine situation, a whole set of challenges where governments, companies are going to have to focus on building resilience in supply chains over maximizing efficiency in the medium-term implications. You know, your news today on Germany firing up the coal power stations, focuses on energy security, food security, on the government side, on the business side. Robustness of supply chains, friend-shoring, near-shoring. These are things which over time are not going to contribute a lot to economic growth, but may contribute to the ongoing inflation pressures.
Okay, Andrew Balls, CIO for Global Fixed Income at PIMCO. We appreciate your insights. In terms of hedges, Andrew's calling for exposure to tips, commodities and real estate. Thank you, Andrew Balls. Right, coming up, the UK is a long way from reaching gender parity in the workplace. That is according to a report from the Chartered Management Institute. We get the details next. This.
We see you.
For who you are and who you can be.
We want you to unlock your potential.
And change the course of your future.
We can help you grow, whichever way you decide.
So let us welcome you to your new home.
Because we see opportunity.
We see potential.
We see you.
The University of Central Lancashire.
VK ฟิล์มติดบ้านกันร้อนสูงราคาถูกช่วยประหยัดค่าไฟแอร์อย่างเห็นได้ชัด
You will put a woman on Mars. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Here in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London, standing in for Francine Lacroix. Now, the Chartered Management Institute's new report says that the UK would need, get this, 560,000 more female managers in order to achieve gender parity. We are joined now by Anthony Painter, Director of Policy and External Affairs at the Chartered Management Institute. Anthony, in fact, thank you for joining us. Give us a sense of the importance of this statistic and what it means about innovation and cost loss for businesses who are not propelling female employees to those management levels.
In short, it means a lot.
And a lot of this debate has been driven by numbers, and we've put out some big numbers this morning around that gap. Over 500,000, as you said, Tom, rising to 800,000 by 2026, in fact. But why does it matter? Well, it matters because we know that businesses that have a properly inclusive culture, processes, organisation are more profitable, more innovative, more productive, more successful, and countless studies have backed this up. And this research goes into the depth of those studies from McKinsey, from the OECD, from Boston Consulting. You can just reel them off. And this matters to businesses, and it matters to the economy at large.
Anthony, you talk in this report about the fact that a lot of companies talk the talk, but they just don't walk the walk when it comes to improving the opportunities and improving the gender balance. What are they missing out? What are companies not doing that they should be doing?
Well, for a start, not taking it seriously and getting complacent far too early. There's been improvements. There's no doubt about that. Over the last decade or so, we're seeing more women in senior leadership roles, for example. We're seeing a more ethnically balanced workforce. However, the progress has been incremental. And the congratulation has been large. And so the first thing they're not doing is facing up to the fact of how short we are. We don't have enough disabled people in organizations in managed leadership position. We haven't got enough ethnic balance. We haven't got enough people from socioeconomic backgrounds rising up the ranks of business and other organisation. What should they be doing? They should be tracking it. They should be looking at the data. They should be setting action plans. Senior leaders should be showing leadership. They should be saying why this is important. It's not just a numbers game. This is actually about business success, about business sustainability. It's about us being successful in the future. All those things are absolutely necessary. And the businesses and other organisations that have taken those sorts of measures have seen gains.
OK, so those are some of the concrete measures that could be put in place by companies. What about at the government level? What does the government need to be doing to lead by example on this?
We're seeing complacency in a lot of business, a lot of organisations. We're also seeing that same complacency in government. Government did some great things. Just a few years ago, the mandatory gender pay gap reporting measures, that seems to have made a difference, right? So it was making a lot of progress. It's fallen behind now. And actually, we had a sort of advisory council. We looked into research. We spoke to a lot of people. And a constant message that kept on coming back during the course of this research is that government is now lagging rather than leading, and we need government to lead. We need government to explain why it's important. We need to be pushed sort of mandatory measures. We need government to use its purchasing power to emphasize the importance of inclusivity, because that will force business and other organizations to change as well, force public services to change. So we need government to show more leadership in this environment because of the wider economic benefits. And just think about it at the moment. We're talking about skills gaps, we're talking about record vacancies. What an opportunity to close those gaps.
OK, great stuff. Anthony Painter, Director of Policy and External Affairs, on some of the key and concrete measures both companies and government can be putting in place to address the lack of balance when it comes to gender. Thank you for joining us. Coming up here to talk US politics, we are joined by Moelis Vice Chairman and former US House Majority Leader Eric Cantor. Stay with us for that important interview. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
We see you.
For who you are and who you can be.
We want you to unlock your potential.
And change the course of your future.
We can help you grow, whichever way you decide.
So let us welcome you to your new home.
Because we see opportunity.
We see potential.
We see you.
The University of Central Lancashire.
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
We
are accelerating into a digitized and decentralized future.
That is why Bitcoin is here.
The cryptocurrency market has roughly a $3 trillion market cap. That's a huge milestone.
This is the largest, fastest wealth creation event in the history of the world. And financial institutions have only now just figured this out.
It is a power to the people kind of technology.
However, we are still tied to the centralized banking system in a way that is unnecessary.
The crypto sector today is largely unregulated.
This is a little bit like the American Wild West.
Essentially what DeFi is, it's like a big casino.
That's scary to the JP Morgans because they're seeing all this growth and they're left out.
You all do whatever you want and I don't care.
We're seeing a revolution unfold right now. These are historic times.
Buckle your seatbelt. This is where the ride gets really interesting.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London, and here are the top stories. Jay Powell tells Congress a recession is possible as steep interest rate hikes will make a soft landing very challenging. He appears before lawmakers again today. Sounding the alarm, Germany's Habeck triggers phase 2 of Berlin's emergency energy plan. The Greens leader warns the country is in the midst of a gas crisis. Stocks and futures lose ground. Bunds rally and the euro falls after big misses on European PMIs. Bridgewater Associates discloses a massive position against European stocks. So there's Ray Dalio making his move against European stocks. That weaker data, Barclays telling us the Eurozone now faces a perfect storm. French, German and Eurozone manufacturing and services PMI all coming in below the estimates. We now have the UK coming out with its manufacturing data for the month of June. 53.4 is the number for the month of June out of the UK when it comes to manufacturing PMI. For the context, it is a marginal miss from the forecasts of 53.6. Not significant, marginal. Services PMI unchanged at 53.4, the forecast was for 52.9. So UK services coming in slightly better than estimates. 53.4 versus the forecast of 52.9. Again, this is for the month of June. Manufacturing a little softer here in the UK. And of course, how this feeds into the decision-making of the BOE, which is expected to hike again. And its next meeting is the expectation from the markets. Let's turn, though, from the UK and the Eurozone to what's happening in the US, and particularly politics and the inflation overlap. President Joe Biden has called on Congress to implement a summer gas tax holiday in response to soaring energy prices. It comes as the president reiterated that a US recession is not inevitable following a conversation with former Treasury Secretary Lawrence Larry Summers. My next guest is Eric Cantle, Vice Chairman of the investment bank Moelis, but also, Eric, of course, a Republican, served as US House Majority Leader from 2011 to 2014. And for much of his career in politics, he was the only Jewish Republican serving in Congress. Eric joins me now. Great to have you in the studio. And of course, we have to talk about inflation. We have to talk about what Joe Biden, the president, is doing to try and get gas prices at the pump in the US down. Let's start with the impact on the polling numbers for the US president as he faces up to the midterms of November. Before we unpack what's happening in the energy space, is it now a given that the Republicans take control?
Well, Tom, first of all, I would say this from the Biden administration's standpoint. I think that you could say figuratively and literally they're out of gas. And obviously, literally, we're seeing the gas prices at the pump, which has prompted this administration to put forth the proposal yesterday for a gas tax holiday. But again, it's indicative of the fact that the administration is flailing. Even the Democrats on the Hill, Chuck Schumer and Nancy Pelosi, the leaders, have come out and criticized that proposal.
Would you back that proposal? Why does that not make sense?
No, it doesn't make sense at all. First of all, you can't guarantee that that's going to make its way to consumers. The way that the gas tax is levied in the U.S., it's not at the pump level. So it's at the import level or at the refinery level. So you don't know whether the consumer would ever even realize a benefit from that. Plus the fact that those revenues go into the Transportation Trust Fund. Anybody who follows that in the United States know that trust fund is underfunded, so you're just digging the hole deeper.
Okay, so they would say that the infrastructure plan is going to make up for that, but they would also push back and say, look, there are the geopolitical effects on the energy prices, and you mentioned refiners, that they're making a killing out of all of this. So to address those points, but also to say what policy reaction would be appropriate at this stage?
Well, at this stage, there's no question there are multiple crises that are impacting the American consumer and affecting business decision-making in the U.S. So right now, I would think priority one is to make sure that we unleash America's potential as far as the ability to produce more oil and gas. And as you may know, Tom, the politics in the U.S. on the left are just vehemently against the administration doing any of that. So you've never seen President Biden take to the podium in the White House and say, we're going to do everything we can in our power. We have the resources here in the United States to answer the call of the consumer and to bring those prices down, just to give the market the signal the administration's not going to stymie the permitting process and the ability for more production. And they just won't do that.
Well, again, they would point out that they have eased back on some of the permitting, and they've had a meeting this week with energy executives from some of the oil majors. They would say that they are trying to do their bit, but they would also point out that the energy majors are making an absolute killing in terms of profits.
All the while, exactly. All the while, all they can do is go in and blast. On the one hand, they're saying to the energy companies, do more. On the other hand, they're saying, you are raping the consumer, so therefore you are bad and we're going to tax you. The whole thing is just, again, that's why I go say the administration is just out of gas, literally and figuratively.
You could impose a tax on the energy majors as they've done in the UK. That's a windfall tax.
How in the world would that help the consumer? I mean, right now you asked about politics and asked about Republicans and whether my party will win the midterms, and I would say today, absolutely, the Republicans will retake the majority in the House and will also in the Senate.
Okay, that's the prediction for November, and many would agree with you on that front. We've got the congressional hearings around January the 6th that have been unfolding over the last few weeks, and it's a reminder of the inability for your party to detoxify themselves from a president, of course, who claimed falsely and lied about this, that the election was stolen. We know that's conclusive. Where is the Republican Party in terms of trying to detoxify themselves?
Well, first of all, I would say, Tom, I was unequivocal on the day that happened and shortly thereafter, publishing an op-ed opinion piece in the Washington Post just declaring that when you don't tell constituents and the voters the truth, this is what happens. And so I have no tolerance for any of that. But I would say in the end, these items the Democratic Party is trying to put on display, I think they pale in a comparison of what American families wake up to every morning when they think about what they're trying to do in terms of managing their family budget. When you've got inflation running over 8% in the United States, you've got gas prices way over $5 a gallon on average at home as well. So unfortunate for the Democrats, fortunate for my party, but frankly, it's the American people that are losing because they can't quite keep up with the cost of living.
That is the here and now, and those pressures are real on households across the United States. But further forward, of course, the question of democracy, the very viability of US democracy. You've talked about the need to tell the truth, but the Republican Party is still backing a number of candidates, many candidates up and down the ballot, who continue to spread the lie that this election was stolen.
Look, again, I don't condone any of that, and I would say the overwhelming majority of my party is not in that camp of telling the lie. Number two, I would say anybody who says that democracy is threatened and our institutions can't withstand the pressure On that day, there was a binary choice. The institution rose to the occasion in Congress. The institution of the courts rose to the occasion and struck down and dismissed every attempt by the Trump campaign to make those challenges. And so I would say we have a problem, though, in actually the everyday functioning of the government. I do think you're going to see the Congress produce this this bill on gun safety right now, and whether you're for it or you're against it, it does indicate that there is an ability for the institution of Congress to work. Now, I would say, back to my point about the administration, it's not coming from the leadership in the White House, and that's really what the process in Washington is missing right now, is strong executive leadership.
And it looks like that bill could get through, which would be remarkable, as you say, historic in terms of gun rights. When it comes to, in terms of putting in policies that may reduce some of these terrible shootings that we've seen across the US. But coming back to the question of Trump, does the Republican Party need to move on from Trump, or is he the most likely candidate still in 2024?
There's no question that Donald Trump is the most impactful force in the Republican Party today. He is the most coveted in terms of endorsement in the primary processes, and I do think that he is the front runner for sure for the nomination of our party if he wants to run.
And to be clear, you would support Trump in 2024 if that was the case, despite everything he's done.
I'm a Republican, and I've always supported the Republican candidate. And again, just with the discussion we've had, Tom, the policies that are underway in the Democratic Party being commandeered by the progressive left are not the policies that will ensure America continues to lead. So I could never support those policies, and I am a Republican.
It's just many people will look at that and say, OK, maybe the Democrats have gone too far to the left on some of these issues. But then you have the central question, again, of a president who tried to manipulate the outcome of an election in the most powerful democracy on this planet.
Again, I think what's most important to the American people right now is the ability for them to see a future for themselves and their family, and the ability for them to afford the cost of living right now and the cost of life. And right now they're having a real difficult time in undertaking that challenge.
OK, and that is the focus. Despite the fact that there are deep concerns, not just in the US, but outside the US. You must hear this all the time. And you kind of push back on that idea that democracy in the US is vulnerable at this point. But many outside and within the US are deeply concerned about this. And these are not people on the extremes.
Well, listen, I tell you, I'm concerned about the functioning of our government for sure, and I want to see it function. There is perpetual gridlock. That gridlock is reflective of the fact that the country is very divided and polarized politically. In the end, I think the greater forces will take over, and we're going to see a real potential for leadership again in Washington. Right now, we're just sort of reflecting what democracy produces, which is the polarization that is actually politically there across the country.
Well, there certainly is that polarisation. Very pleased to say that Eric Kentor stays with us. We're going to talk about the markets, M&A, and where Eric is seeing opportunities, of course. Vice Chairman of the investment bank of Moelis and former US House Majority Leader staying with us. Plenty more, of course, from Eric Kentor after the break. We'll talk as well about geopolitics, Ukraine, Russia, energy. Ukraine, by the way, taking one step closer to becoming a member of the European Union. We've got more on that story in a few minutes. Stay with us. This is Bloomberg.
บทหนักแต่สบายด้วยประกันสุขภาพเหมาจ่าย Signature Care จาก Cigna.
We see you.
For who you are and who you can be.
We want you to unlock your potential.
And change the course of your future.
We can help you grow, whichever way you decide.
So let us welcome you to your new home.
Because we see opportunity.
We see potential.
We see you.
The University of Central Lancashire.
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Welcome back. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Eric Cantor, Vice Chairman of the investment bank Moelis and former, of course, US House Majority Leader, still with us. Very pleased to say. We were talking in the break about the geopolitics of Russia and Ukraine. Let's start with this. There has been some bipartisanship when it comes to how to address the challenge of Vladimir Putin and the war in Ukraine. Does that hold up? Or are you starting to get a sense that maybe, amid all the inflationary challenges you were outlining for us before, that there is some sense of Ukraine fatigue set in within the body politic of the US?
Well, Tom, first I would say I think overwhelmingly the American people support the cause in Ukraine to stop an aggressive move by Vladimir Putin, just busting all international norms, invading a sovereign nation, and frankly, the absolute devastation he's caused to Ukraine. I think there is, yes, consensus in the United States that we support the Ukrainian people in their efforts. However, I do think in terms of issues that are priority around what we say the kitchen table, I don't necessarily think that the issue of Russia's invasion of Ukraine is number one anymore. I think much more so now, American consumers, families, individuals, businesses are much more focused on the economy. And frankly, from a consumer and individual standpoint, it is about that cost of life and cost of living if you think about gas prices and grocery prices. So I think going forward for this midterm election that we're going to see, that those issues, not Ukraine, will be more dominant.
And of course, it's those energy questions around higher prices, of course, whether it's oil or gas, not just feeding into the impact on households, but also part of the geopolitics and part of what we're seeing in terms of the attempts by central banks, the Fed, of course, to raise rates. Let's get there then in terms of what is happening. Second half, throw forward to the second half of this year in this higher rates environment, lower liquidity across the globe. What is M&A looking like? Which regions, which sectors most active? Is it starting to ebb?
Well, at Moelis & Company, what we see with our clients, there's a lot of desire for dialogue around deals. There's no question about it. The thing that has occurred, though, over the last several months is the visibility toward completion has been somewhat diminished. And I think that is to be expected as we have all the uncertainty and clients are trying to navigate the prospects of continued inflation, the rise in interest rates, all the geopolitical concerns. So things are just taking longer. But I think our view from an M&A standpoint is, as you've seen the public markets essentially shut down in terms of the IPO market and the SPAC market, M&A becomes a real option for exit for many companies. And so we deal a lot, as you know, in the world of the financial sponsors. They have a lot of capital. They definitely are being more savvy and cautious in these uncertain times, but their mandate is to transact. And so we see with all of the change that's occurring, all of these sort of crises that people are facing, that long term that bodes well for the M&A market.
And what are you seeing? Valuations tie into this. What are you seeing in terms of valuations?
Well, no question that we are trying to reach equilibrium, if you will, in terms of valuations in the private markets. As we know, the public markets have certainly, the valuations have come down. And that's all sort of some of the dynamic that is playing out in the minds of our clients at Moelis. But again, I think we take the view that with these times of change, adding to that technological disruption, which has not stopped, despite the valuations in the tech arena in the public markets, that will even spur strategics to want to think about where they want to position for the next 5 to 10 years. Ultimately, that will require them to transact.
Where are you seeing the most activity? In which sectors? Can you kind of unpack for us where that activity is most pronounced?
Well, for sure. I mean, obviously, in the energy sector, there's a lot of interest right now, which has been a real turnaround in terms of investor desire to even consider.
Is that interest back into carbon, or is it aligned with ESG? Because we've seen ESG under pressure as well.
Well, I would say in the U.S. there's a lot of interest in the private markets for sure to go back into some transition mode, which means natural gas. And part of the issue has been, back to my prior statements, that the signals from the government have been we don't want to see any long-term investment in fossil fuels past 10 years, which, again, is stymieing the ability for us to do what we need to do to bring down fuel costs for the American people and, frankly, for global consumers. So I do think that sector for sure. Information services, we're sitting here at Bloomberg. I mean, that's certainly a sector that continues to develop and to accelerate. I mean, all sectors have had some impact given the macro environment, but I do think longer term, healthcare, there are other business services sector that our bankers at Moelis are very busy in terms of dialogue with clients.
Okay, Eric, we can't let you go without another question on politics, given your storied history and experience within the political realm of the United States. If the GOP win in 2024, if you have a Republican president back in the White House from 2024, would you consider a position if they reached out, tapped you on the shoulder, Eric?
Tom, I've lived long enough and had a long political career, and now one with Moelis, that I've learned to never say never. But I'm very, very privileged to be where I am. I'm enjoying the ability to see the world in terms of a financial lens and the ability for us globally to continue to help businesses to grow. And that's really where my lens was when I was in politics. I was a small business person and I always believed very much in innovation and creating a platform for investors to create wealth, to create jobs.
You push for the Jobs Act. We know about that. That sounds like you're keeping the window open, you're keeping the door open. And I'm going to have you down as Treasury Secretary in that Republican administration. You wouldn't push back on that, I'm assuming.
So listen, I think there are a lot brighter people than I that probably would be first up for that job. But again, never say never in life.
There you go. Humility as well. Eric Cantor, thank you so much. Great analysis, great insights into what's happening, of course, within the domestic politics of the US, the geopolitics, and of course, M&A with Moelis. Eric Cantor, Vice Chairman of the investment bank that is Moelis, and former, of course, US House Majority Leader. Thank you for joining us on set. Coming up, Ukraine takes one step closer to becoming a member of the European Union. We've got more on that story next. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
You will put a woman on Mars. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now, European Union leaders are gathering in Brussels, where later today they are expected to grant candidate status to Ukraine and Moldova. The bloc will also discuss measures to combat the impact of Moscow's reduction of gas supplies to Western Europe. Germany's economy minister, Robert Habeck, called it an economic attack. And moments ago, Habeck triggered phase 2 of Berlin's emergency energy plan, putting the country one step closer to rationing, yes, rationing of gas supplies. For more, we are joined by Bloomberg's Europe correspondent Maria Tadeo. Maria, Germany really now sounding the alarm bells on this issue. Robert Habeck saying that he wants Europe to help with LNG deliveries. Will he get it?
Well, Tom, we're about to wait and see, but that language coming now from the economy minister in Germany now really sounding very, very concerned. And Tom, it really reflects some of the chatter here behind the scenes in the summit today. Real concerns of Russia, which, as you know, has been majorly reducing and limiting some of the gas supply to countries like Germany and Italy in the past 2 weeks, could really turn on the heat by potentially at one point cut it all together. And of course, the timing of this is particularly dangerous for Europe because storage is not full yet, and we're approaching what is the summer, of course, but this is all in preparation and with the view of winter. That is the most vulnerable time of the year for the European economy. A lot of them, of course, very dependent still on Russian gas. So this is a moment of a lot of concern here, a lot of worries about the implication for the European economy. And really, when you ask what is the solution, what is the plan, the issue here is that for the time being, they don't have one. So really, what a perfect storm is about to hit Europe.
There we go, the perfect storm. And of course, all of this linked to what is happening in Ukraine. And you could be seeing then an historic decision when it comes to Ukraine's candidacy for the EU, Maria.
Yeah, and Tom, this is now seen almost as a given, a done deal. All we're waiting for is now the formal confirmation of this candidacy status for Ukraine. This is clearly a political victory for President Zelensky. He said he wanted this. Ukraine campaigned on this for years, by the way, and this is a boost of morale for the country. But of course, we have to remind everyone watching this that this is a very long period. There's a big difference between being a candidate country to the EU and being a member of the European Union. And as you know, some countries get stuck in between for years. So over the short term, it is a win for Ukraine. But of course, on the longer period, it comes with a lot of challenges for the country.
OK, Bloomberg's Maria today on the ground watching, of course, as officials there meet to discuss that candidacy application by Ukraine. Historic, as Maria has outlined for us. Of course, the challenge and the rewriting of the energy complex across Europe. Germany taking that step to phase 2. Rationing now is potentially a prospect for the largest economy in Europe, which is remarkable when it comes to gas. In terms of the markets, you're seeing losses now of 1%. Still significant moves into German bonds. 19 basis point move. Look at that on German 10-year, now at 144 after that weaker than expected PMI and services data at the Eurozone. Plenty more coming up. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller, Kayleigh Lyons in New York, Anna Edwards, of course, in London. Stay with us. This is Bloomberg.
บทหนักสบายด้วยประกันสุขภาพเหมาจ่าย Signature Care จาก Cigna
For every business everywhere, there's one thing that matters more than anything: growth. With a trade desk, you can unlock the power of digital advertising to help drive your growth. Whether it's using more data to build brand trust, reaching more customers in more innovative ways, or proving the impact of your advertising in more places. If powering every stage of your growth matters, the media buying platform you choose really matters. So choose the one built for what matters.
We see you
for who you are and who you can be.
We want you to unlock your potential
and change the course of your future.
We can help you grow, whichever way you decide.
So let us welcome you to your new home.
Because we see opportunity.
We see potential.
We see you.
The University of Central Lancashire.
You will put a woman on Mars. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
David, art is so important. We know what art does to young people. We know that exposure to art brings about higher levels of empathy. It helps people understand how other cultures, other people live, and it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
For the last few years, the fundamentals have mattered less than things like momentum and investor enthusiasm.
I would say we have a 50% likelihood of a recession globally, but also in Europe.
We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data.
They're definitely going for a soft landing. It's just going to be almost impossible for them to pull it off.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, June 23rd. Our top stories today. Fed Chair Jerome Powell tells Congress that interest rate hikes could push the U.S. into recession, and a soft landing is very challenging. He'll testify in front of lawmakers once again today. The price of oil is falling again today as concerns over a slowdown increase. West Texas Intermediate is now down more than 15% in a little more than 2 weeks. Ukraine starts on the road to membership of the European Union. EU leaders meeting in Brussels plan to grant the country candidate status. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And you can't move for mentions of the R word, recession, Kaylee, something that seems to be moving the markets at this time.
Yeah, it is recession fears that are so dominant in this market right now, Anna, and that was just reinforced by the commentary out of Jerome Powell on Capitol Hill yesterday. He says he doesn't think it's overly likely right now, but he can't rule it out. So that is something that the markets are grappling with. Certainly that was the case in Asia, though overall it was a more positive session. The MSCI Asia Pacific Index was up just a couple tenths of 1%, but you actually saw outperformance coming from China after Xi Jinping in remarks overnight talked about that 5.5% GDP growth target, reinforcing it, saying that China is going to have policies that support growth. So that gave a little bit of a sentiment lift there. And in Hong Kong, the sentiment lift came from the incoming chief executive, John Lee, saying that he's going to look at easing border controls. So that lifted stocks there by about 1.25%. Broadly, though, those recession fears really are at the forefront. And you see that reflected in the bid for safe haven assets, or at least perceived safe havens. That in yields coming lower really across the world, including in Australia, where the 10-year was down 13 basis points to just about 3.85%. And then the only currency stronger against the dollar today is the Japanese yen, a second day of strength coming off of the weakest level since 1998. Right now, dollar yen trading at 135.46.
Right at the weakest level that we saw in 1998. Kaylee, the perceived safety of government debt, that's what we see investors looking for today in the U.S. 10-year. That's why we see yields right now at 309.63. Think about the fact that this is 40 basis points lower than we were just 2 weeks ago. We touched 350 in an intraday session. So the concerns are definitely about the R word, Anna, definitely about a recession. We only see S&P futures off about 0.1%. I thought it was really interesting this morning on Bloomberg Radio hearing you talk to George Buckley of Nomura. His bank thinks that we're going to see 5 consecutive quarters of contraction. That would be very bad news, obviously, for the economy and, of course, for oil demand as well. As a result, oil is down 2.33%, not just as a result of George Buckley's forecast, but just in general, the recession concerns around the globe. And then Bitcoin, normally acting, of course, in unison with S&P futures, normally very correlated with risk assets, but today it's up 3.5%. Keep in mind, this is just the trade from midnight, and we're still holding at that sort of big round number at 20,000 right now, $20,575. Anna, what do you see in terms of Europe?
Yeah, we see that same risk aversion here then in markets, not as you were indicating in Bitcoin, but certainly in some of the other assets you went through. That search for the perceived haven of government debt, that continues to be the case here in Europe as well. So equity markets are weaker, down by 0.9% on the CAC Quarante, down more than 1% on the Xetra DAX. And this is almost across all sectors, and basic resources right at the heart of things. So that is one of the weakest performing sectors across Europe. And copper is continuing to get weaker from here. So we've seen a lot of weakness creeping into copper over recent weeks, and that has intensified as we've seen more mentions of recession. It seemed to be focused on Chinese growth concerns previously, and now morphing into a more global concern, in particular around the US, and also concern about energy transition, and maybe that weighs on copper as well, if that is to be delayed in any sense. These two assets both responding to the same story, and this is about the PMI story and how quickly that PMI, that measure of the economy in Europe, how quickly that is declining from here. We got PMIs out of Germany and out of France, and both of those came in, yes, indicating those economies are still growing, but they were rapidly declining, and they came in weaker than had been expected, much weaker than had been expected. George Buckley, Matt mentioned from Nomura, pointing me towards the new orders number in Germany, saying that signifies an economy that is slowing very quickly. So we keep, of course, the euro in focus as a result. That's down by 0.7%. Money going into the perceived safety of government debt, and we see the 5-year yield responding, we see the 10-year yield responding, and we're seeing some quite sizable moves in today's session. I put in natural gas as well because we are still monitoring, Kaylee, what's going on in Germany. They've moved to this alarm stage of their gas management plan in relation to Russian input of gas into the German economy. The search is on for alternatives, of course, because everybody mindful of what could happen with those Russian gas taps as we head towards the winter. So a lot to think about when it comes to the energy picture here in Europe. More on that shortly.
Yeah, absolutely. We'll have more on that in just a minute. First, though, we want to run you through the events in the day ahead, including the summit of EU leaders that starts in Brussels. Ukraine's candidacy status will be high on the agenda. The Federal Reserve will also release minutes of the results of its 2022 bank stress test. Then at 8:30 a.m. New York time, we'll be getting U.S. initial jobless claims and continuing claims. And finally, at 10 a.m. Eastern, day 2 of Jerome Powell testifying on the Hill, this time before lawmakers in the House Financial Services Committee, Matt.
All right, we will be watching that closely after yesterday, Jay Powell's most explicit acknowledgement yet that raising rates could lead to a recession. He told lawmakers that a recession is possible and achieving a soft landing will be very challenging.
It is our goal. It is going to be very challenging. It has been made significantly more challenging by the events of the last few months, thinking there of the war and commodities prices and further problems with supply chains. And the question of whether we're able to accomplish that is going to depend to some extent on factors that we don't control.
Jack Fitzpatrick, Bloomberg government reporter, joins us now from D.C. to give us more of what we can expect from day 2 of Powell's testimony. Jack?
Well, first of all, you can tell that Powell is trying to thread a needle and acknowledge that there is a risk of a recession, but not say that it's inevitable, and make it clear that he has a difficult job ahead of him. That would be a major focus for members of both parties, I think, especially Republicans, trying to take the temperature on exactly how bad the situation is. One other interesting note from yesterday's hearing in the Senate that could transfer over to the House is a bit of pushback yesterday from Elizabeth Warren, trying to make the case from the progressive side that raising interest rates does not take care of the specific supply side challenges that have played into inflation so far. It doesn't specifically lower gas prices or lower grocery prices. The House Financial Services Committee has some high-profile progressives as well, including Alexandria Ocasio-Cortez and Rashida Tlaib, a wide range of Democrats from them all the way over to Josh Gottheimer. So if there's some pushback from the progressive side along the lines of what we heard from Warren, that would be a major takeaway from today's hearing, and we'll kind of suss out the differing positions that Democrats have on whether they really want to push Powell on those interest rates.
And of course, we also heard some Democrats really pushing the corporate greed narrative when it comes to the reason for higher oil prices. And of course, President Biden yesterday tried to address that, calling on Congress to suspend the federal gasoline tax for 90 days. It's obviously largely a symbolic move, but just take a listen to what the president said yesterday.
By suspending the 18-cent gas tax, federal gas tax, for the next 90 days, we can bring down the price of gas and give families just a little bit of relief. I call on the companies to pass this along, every penny of this 18-cent reduction, to the consumers. There's no time now for profiteering.
So, Jack, clearly this is a president that is running out of options as to how to address higher prices at the pump. Is this even a real option? Does this go anywhere in Congress?
The initial response to that was not particularly positive. Obviously, a lot of skepticism from Republicans, but even some key Democrats. There was a statement from Speaker Pelosi that essentially was a non-endorsement and kind of sidestepped the issue. But most interestingly, I thought, was Peter DeFazio, the chairman of the Transportation and Infrastructure Committee, who pointed out that this would ultimately take money away from the Highway Trust Fund. Lawmakers and President Biden tried so hard for that infrastructure bill that they got passed into law, and the idea that this would do more for individual consumers than it would to take away money from infrastructure projects is something that DeFazio and some other key Democrats may be skeptical of. So you're already seeing some pushback from Democrats who are allies of President Biden, let alone Republicans. So for now, there may be some support, especially from moderates who want to be seen doing something ahead of the midterms, but it doesn't exactly have a glide path forward, probably in either chamber.
All right, Jack Fitzpatrick of Bloomberg Government in D.C. And of course, we know that the price of oil doesn't purely determine the prices at the pump, and yet maybe some relief could be coming down the road as oil is resuming declines today amid increasing recession fears. Let's get more with Bloomberg's Danny Berger. So, Danny, it seems that the narrative firmly has moved to fears around supply to now fears around demand.
It's amazing how we just seem to be oscillating between these extremes, Kaylee. That's right. It's no longer unabated inflation. It's now unabated recession. And you can look at what oil's done, falling some 11% since Friday. That's a pretty extreme move, given that the oil market is still very tight. We are still in an extreme, a super backwardation for this market. So it just shows how much of recession fears are filtering through the market. And there's really not a clear consensus on where oil goes from here. Goldman says, look, demand still outstrips ship supply because of that tightness in the market. The Fed, they can't print commodities. Cities say they expect oil to keep moving lower. But to be clear, it's not just oil. It is commodities across the board. Anna, I know you flagged copper before at down 20% from its highs. And I have a chart. It's the classic kind of Dr. Copper chart that does show the gold to copper ratio. That symbolic move of what's happening in the economy is at its lowest since early 2021. So it does suggest that this move higher in yields, the move pricing in inflation, is starting to turn. Perhaps that has peaked out.
Yeah, and let me get to something else that's giving us a bit of a gloomy sentiment check on the global economy, and that's here in Europe. We've had the latest European PMI data, Danny, which paints a picture of economies slowing pretty quickly.
Yeah, 16-month low for that data coming in. S&P's global economist pointing out that the German economy, the German numbers, essentially losing all the momentum that they had built up coming out of the worst of the pandemic. So yeah, it's not just inflation fears in the U.S. They are really acute in Europe right now after this data. BlackRock's Rupert Harrison saying odds are on for recession in Europe. And likewise, we have seen the dramatic move in this European bond market. 10-year German bond yields, those on course to see their biggest drop since March. France also seeing a drop of 18 basis points as well. So it is a big push into bonds. And of course, the euro also reflecting that economic weakness. That is down about 0.6%, Matt.
All right, Danny, thanks very much. Danny Berger there talking to us about what's going on with European PMIs as well as oil and the energy picture. We'll stick with that right now because Germany elevated the risk level in its national gas emergency plan, raising it to the second highest alarm phase following steep cuts in supplies from Russia. Maria Tadeo, Bloomberg Europe correspondent, joins us now from Brussels for more. Maria?
Yes, Matt, very serious situation for Germany now. And the language coming out of the German economy minister, Mr. Habeck, today now sounding very concerned about possible supply issues when it comes to Russian gas. And Matt, the timing of this is no surprise because we've seen that Russia over the past 2 weeks has been limiting the number of supply or the amount of supply into countries like Germany and Italy. There is now a real concern that this is going to continue ahead of the winter months or that Russia could potentially cut it at one point altogether. Now, this is a time of the year in which European countries, of course, start to prep their storage for the winter. The winter is a time of the year in which European economies are incredibly vulnerable to any issues with Russian gas, some of them depending almost entirely on this. And it does show that for the European economy, this is a very serious situation. When you ask, and I've asked this repeatedly today, what is the plan if that was supposed to happen or if that were to happen? They don't have an answer for it. So this is really a perfect storm that's about to hit this economy.
Yeah, so do we get one step closer to rationing of gas supplies in Europe? Maria, you're gathered there, well, the international media we see gathered there for an EU leaders summit. This no doubt will get a mention, but also accession talks around Ukraine.
Yeah, and Anna, today European leaders are expected to give candidate status to the European Union to Ukraine. It is a political victory for President Zelensky. They had been campaigning for this for a long time. It's in their constitution, the fact that they want to one day join the European Union. I should note, however, for our international audience that there's a big difference between being a candidate to join the European Union and an actual member of the EU. Sometimes that transition can take years, but nonetheless, it is a boost of morale for Ukraine. It doesn't mean they're joining overnight, but nonetheless, as I say, it is a political victory for Ukraine as the war against Russia continues.
All right, Bloomberg's Maria Tadeo reporting from Brussels. Thank you so much. Now to